LHV Persian Gulf Fund performance in November was -3% and in December +2.1%, bringing full year 2017 performance to -0.6%. Now, when we're looking at full year returns for the last 5 years, then we'll see that the year before, in 2016, we had a result of -1%. In 2015, we had -16%. In 2014, +12%, and in 2013, +49%. So, in total, this gets us +6.7% performance per annum over the last 5 years. 2017 and of course all of the last 3 years have been difficult for the region. In 2017 in particular, Saudi Arabia got into media a lot with hard stories because we saw the escalation of tensions between Saudi Arabia and Yemen, between Saudi and Iran, Saudi and Lebanon, Saudi and Qatar, and we also saw the crackdown of corruption allegations and power struggle in Saudi Arabia. But in addition to that, we also saw very positive developments on the oil price and on the OPEC side. 2017 was a year when 1.8 million barrels of oil were drawn from the market by OPEC and Russia, and that resulted in the decline of global inventories starting from the second quarter of 2017, and as a result the oil prices started to move higher. So when in the beginning of the year a barrel of Brent oil cost about $56 per barrel, and during the summer months it had dropped down to around $44. Then we ended the year at about 2 and 5 year highs at $66 per barrel. $66 per barrel, is it much? Is it not so much? When we're comparing this to the budget break-even oil price on an aggregate level for the GCC countries, then the GCC countries need about $60–61 barrel per oil to balance their books for 2018. So actually what they're already getting in the market is about 10% more than what they need. And this gives them confidence to perhaps boost their fiscal spending and stimulate economies. For example, Dubai has been very aggressive in its budget for 2018, as they are preparing themselves for Expo 2020 and have boosted their fiscal spending by 20% for 2018. Now, when we're looking at valuations, then LHV Persian Gulf Fund trades at 9.2 times 12-month forward-looking earnings and offers 3.8% dividend yield. And when we compare this to MSCI Emerging Market Index valuation, which trades at 13 times forward-looking earnings and offers just 2.8% dividend yield, then we can definitely say that our fund investments and the GCC region in general trades at very attractive multiples. As we look towards 2018, we are expecting decisions from FTSE and MSCI index compilers in the first half of 2018 as to whether or not to upgrade Saudi Arabia into emerging market indices. And in the second half of 2018, we have the Saudi Aramco IPO. And these kind of events will likely draw additional foreign investor interest towards the region. Next month, we start to receive the Q4 financial results from our portfolio holdings, and I'll talk more about those results in the next video overview. Thank you.